Eric Mwathe@mwathe.com, November 1st, 2016. Let's take a look at the chart for USO about 2 weeks ago, which was November the 14th. This is what it looked like on the daily, and a lot of people are playing this breakout here at the time. So it looks like it was breaking out and the trade was to be bought to the upside, but based on some of the other things that we look at, I was not too sure, and I'll share with you some of my comments at the time and my analysis to subscribers during this seemingly good breakout. So that is what it looked like November the 14th, 2016. Let's take a look at since then how it's trading. So you can see that it's off the highs here, of course, and has drifted lower. So that's the chart for USO over the last 2-3 trading weeks. Now let's take a look at the chart for UNG around November 14th. Again, there was this seemingly nice strong breakout. So this breakout here seemed attractive if you look at the price by itself, but there were other reasons why I suspected, and I shared with subscribers, that more than likely there was going to be a turnaround situation and that this would drift lower. If we take a look at what has happened to natural gas over the last 2-3 weeks, you can see since this breakout attempt here, it has suddenly, or at least swiftly, rolled over, so which was consistent with some of the things we were looking at. So let's take a look at my comments, again going back to the weekend of November the 16th to subscribers, where I was discussing natural gas and USO. So let's take a look at what my comments and my analysis at the time to see why I suspected there was going to be a pullback, even though it looked like a good breakout at the time. We take a look at USO. Since Thursday, not much has changed. I still hold the view that the 5-year weekly chart is where the action is taking place. I still am of the view that this is where it could potentially and might most likely stall based on this break coming off the highs of 2014. And just we've been drawing a line from there, because we know if we show resistance week to week on this line, maybe it should be a little bit lower, but if we show resistance on that line, we expect it to pull back. I still hold that view that it pulls back. Let's take a look at UNG, which I have to admit I have been wrong in my expectations for it to move lower. I have been wrong as of now, but I still think that this is where eventually it stalls based on this line here. The last 2 times prior to this that it's come to this level, we've seen a major reversal. Even here, or short-term reversal. Now we are still back here. So either it continues moving higher and it proves me that it is cleared resistance and continues to move higher, that would be good, or it stalls around here and we see the beginning of the correction. Now an argument can also be made, and it's a valid argument, that it is clearing the top side resistance like that. So if you look at it from this point of view, it looks like UNG is actually breaking out above that line. So I would say, as long as you want to play to the upside, really you have a reason to, because if you take a look at the weekly, the buy point was at 8.85 or failure point. Right now it is trading very well above that level. So we can say here, if you don't want to be caught on the wrong side of the trade, as long as it is holding above 8.85, really there is no good reason to short this as of right now. It would have to fail the breakout above 8.85 to confirm that it has run out of momentum and that it is now poised to go lower. Now that's the weekly. The weekly looks good. I'll show you why I still hold the view that eventually it stalls. If you go to the daily right now, as of the Friday's action, continues to show this possibility, if not confirmation, of what is clearly a double top rejection as it tried to move above 69.1. That also corresponds with the prior break here, which, as you can see, again is a double top rejection. So I think the hourly chart already giving us short-term sell signal here. I think eventually it stalls. The hourly also adds to that theory, in that from what I can see here, we had an improvement in price highs, but the RSI did not follow through. So that negative divergence, in my opinion, eventually sets the stage for a pullback for natural gas. So I would admit that for now it is breaking out above 8.85, and trying to short something that is above a prior breakout level is always risky. But given the daily and the hourly charts, I still maintain that at some point it's gonna move back below 8.85. At that time, when it moves back below 8.85, one can attempt again to short the natural gas sector or the ETF itself.
Umbap darling, ambam kambati, umbam darling, am kambati.